Yeah, good morning, everyone. So, US market is range bound ahead of elections, which is today in the evening, and result will take time to come out, maybe another 2 3 days for US elections. But key thing is that the market is looking is the direction thereafter. So, US market and futures both were range bound and more of a flattish. Whereas if we see Asian market has seen a positive trend, wherein most of the markets are positive. Japan market yesterday it was closed and today it is positive. Commodity, if we see, are also indicating positive trend, wherein oil is up by around $1.5 and iron ore is up by around 2.5 and steel is up by around 1.5. There are some positive commentary from China about the revival of the economy, wherein apart from that, the meeting of Chinese committee conclave is going on and will be over on 8th of this month. And thereafter, there is a possibility that the Chinese government will reveal a big stimulus plan. So that will also act as a key monitorable in the near futures. So internationally, we are getting though the positive signals, but we are struggling with the domestic performance, wherein corporate results are below expectations. And we are witnessing heavy FII selling in this market, which is also putting a lot of pressure on the indices. So, near term, what we see that the things can continue for some time, at least ahead of these events which are there in the international market. And thereafter, we may take some directions. So, near term outlook seems continue to remain a bit dicey. So, one need to be careful. So any good correction here of means we had seen substantial corrections from around over 26,000 to now below 24,000. So we if we get another 300 400 point more corrections, so then it can become an opportunity to accumulate the stock. So now one should look for the opportunity in quality company from here on. I'll request technical team to take up from here.
Yes, thank you. So, good morning, all of you. Yesterday, we have seen that the Nifty has broken a 24,000 psychological mark on the closing basis, which gives some sort of a cautious point over here. As Sir has rightly mentioned out that we have already seen the 2,400 points deep on the Nifty within the span of almost 1 month, which gives an indication that probably we are likely to retest its 200-day moving average, which comes to nearby 23,450 levels to 23,500 levels. That level can be act as a crucial support levels provided by its 200 DMA. So I believe if you are getting any dips up to that level, definitely one should grab that opportunity to take a buy call on in a quality counters. So for the today intraday purpose, the immediate support is lies at around 23,900. If it's break that level, further downside can be seen up to 23,840 to 23,770 levels. Whereas on higher side, the resistance is placed at around 24,070. If it's break that level on the today's closing basis, then we can witness some sort of a recovery rally, which might take a Nifty towards to 24,150 to 24,120 levels. Coming towards the Bank Nifty, for today intraday purpose, the support is placed at around 51,240. If it's break that level, then more downside can be expected up to 50,000 and 49,740 levels. Whereas the resistance is placed at around 51,740, 52,000 levels. Coming towards the bank, Fin Nifty for today intraday purpose, the support is placed at around 23,600, 23,470. whereas the resistance is placed at around 24,000 and 24,240. So the overall view on the market is a little bit cautious itself. One should wait for a good opportunity. If Nifty is testing its 200 DMA, then we might see some reversal from there onwards. So as of now, just wait for a good opportunity to take a buy call in a quality counter. So that's it from my end. I request Derivative team to take a call forward.
Yeah, thank you, Swati. Uh, on the derivative front, a couple of things that are important. One is that the VIX has increased above the 15 levels. This is because of the US elections, which are ongoing now, and the results are due very soon. Um, this VIX is likely to reduce as the results are announced, so nothing to really worry from there. Importantly, Nifty crossed below the 24,000 levels for a brief while yesterday, and post that we have seen a lot of put built up still at 24,000 strike. It also holds the highest put base, so that does suggest that a strong support is there around this 24,000 levels. Also, there is going to be a likely bounce from 24,000 level upwards towards the 24,500 odd levels because of the overall built up that has been seen now. Another thing, the PCRY that has come down to 0.85, which is also a positive. It is near the oversold zone and can turn upwards from here on. So all in all, there are some positive indications that does suggest some bounce is likely going forward. From the stock specific front, there are certain stocks specifically in the banking sector like PNB, Federal Bank, which are positive on in terms of open interest built up or the rollovers, and we expect these stocks to move up further from current levels. So yeah, look out for the same. Banking should see some short covering action soon. Yeah, so that's it from my side. Like to ask the fundamental team to take over, please.
Thank you. On the result fronts, Gland Pharma Limited posted the result. Result was broadly in line with expectations. Revenue grew by around 2.4% on a YY basis. Uh, the almost flat growth in revenue was mainly on account of slowdown in the rest of the world markets for base business and the impact of the extended annual shutdown of Cenexi, which is a European CDMO facilities. So this is due to the planned installation of the new ampule line. On the margin front, EBITDA margin reported at 21.1%. This was lower on a YY basis. This was mainly impacted by the Cenexis extended shutdown. And if we look at the base business, excluding Cenexi, it has grown by 5% on a YY basis in terms of top line, and EBITDA margin reported at 34%. It has observed healthy performance in its core markets of US, Europe, Canada, Australia, and New Zealand. The management has guided for low double-digit growth in revenue for FY25 and expects Cenexi to provide the EBITDA neutral performance by Q1 FY26. The stock is currently trading at a PE of 22.5 times to FY26 EPS, and it has seen significant correction in the stock price since last few months due to weak performance in the financials led by the Cenexis extended shutdown. We are positive on the company's performance with the long-term view. One can continue to hold with the long-term positive outlook. Thank you.
Good morning. Today, Sagility Limited IPO is opening for subscription. Issue sizes of around 2100 crores, comprising only of offer for sale of 70.22 crore shares. Sagility is a pure healthcare focused technology company catering mainly to the insurance companies in the USA. The primary promoter of Sagility is Baring Private Equity Asia, which had acquired the healthcare business of Hinduja Global Solutions in 2021 for around $1.2 billion. To give a business perspective, Sagility purely works with the payers like insurance companies and providers like hospitals, physicians, and others in the US markets. 90% of the company's revenues come from the payer segment, where the company is involved in the core benefit admin functions, and as such, revenues for the company are also predictable. Sagility has works for almost top 5 of the top 10 global insurance companies, and it has 5 global service delivery locations, mainly from India and the Philippines, and also from the US and Jamaica, Colombia. Now, Sagility competes with few US players and also with traditional Indian IT players like Cognizant, Wipro, HCL Tech. However, the difference is that Sagility is a pure specialist and offer comprehensive services as against the other traditional IT players. And also noteworthy is that traditionally the healthcare firms have been very conservative in outsourcing their work, but post COVID, the outlook has changed, and these firms are now susceptible for outsourcing, and players like Sagility would benefit from this going forward. Company has grown at a steady pace of around 12% in the past, and also has good adjusted EBITDA margins. There are a few non-cash payments after making adjustments for acquisitions, earnouts, amortization, and share-based payment awards. So, adjusting for these non-cash items, company has makes good EBITDA margins of around 24 to 25%. To overall summarize the whole issue, Sagility holds a deep domain expertise and leadership position in this focused healthcare market. Baring's involvement also offers Sagility the capital, the expertise, and operational scale. And the IPO shares are available at an adjusted PE of 24 times and the EV by EBITDA of 13 times FY24 earnings, which we believe is reasonable given its highly focused nature of business, and thus we are recommending subscribe to the issue. The price band is rupees 28 on lower side and rupees 30 on the upper band. Bidding date is 5th November to 7th November. Thank you.
So a few of the company which came up with the number, Sai Silk Kalamandir has come up with the numbers, and the numbers were broadly in line with our expectations. Revenue grew by 6% year on year. Last quarter, they had some one-off problems in sales, and as such, quarter on quarter, the revenue grew by 30%. EBITDA margin also came stable at 15.9% versus our expectation of 15%. And last year, the EBITDA margin were a bit higher at 18.6%. So, PAT is came in at 24 crores versus expectation of 27 crores. Lower PAT is on account of some one-off tax charge in this quarter. So overall results were in line with expectations. Valuations are very attractive at 9.2 times EV by EBITDA for retail company. Generally, we see retail companies trade at a much higher premium. Q3 is seasonally very strong quarter and should see some good revival in the sales and volume. As such, we will await for the con call, which will help today. So we will wait for that, the comment from the management. Then another company which came up with the number, Dhampur Bio. Here the results were declining. In fact, most of all the company in sugar sector will be showing declining trend because of the restriction on ethanol production from B-heavy and juice, and as such the result got impacted for Dhampur Bio also. But going forward from Q3 onwards, the situation will change as the now production from B-heavy and juice ethanol is allowed. And there is an expectation that government is likely to increase the prices of ethanol, as since last 2 years they had not yet increased the prices of ethanol for B-heavy and juice. So that expectation will also support the prices of the company. Any good corrections, if suppose with this poor result happen in Dhampur Bio, one can look to accumulate this stock. Then Raymond Limited reported the numbers, and the numbers were okay set of numbers, wherein the new booking came more or less flattish. The new booking was at 562 crores versus last quarter 611 and last year 650 crores. Otherwise, the results were financial results were okay. Booking were more of a flattish, so result was okay. Then ABB also reported results in line with expectations. The order booking came in at 9,995 crores versus Q1Q 9,517 crores. And last year it was 8,008 crores. So the order booking in this quarter was a bit slow because of the uh, environment and lower ordering in the system. Otherwise, the results were comparatively okay, wherein revenue grew by around 5.2% year on year and came in at 2,900 crores versus expectation of 3,200 crores. But EBITDA margin has seen some positive trend with 18.6% versus last expectation of 17.5%. Stock is trading at around 60 times FY26 earnings. So upside from here, looking at the environment, seems comparatively difficult. Tilaknagar Industry also reported good set of numbers, though the revenue growth was comparatively soft at 6% year on year, but the EBITDA has shown good improvement, mainly driven by improvement in the gross margin. We had seen most of these companies in United Spirit and even Radico Khaitan all have reported better gross margins and in turn resulted into a higher EBITDA margin. So that has also been reflected in Tilaknagar Industry. So the outlook for the company is positive for Tilaknagar Industry. Then Bharat Forge is reported to have became L1 bidder for 6,000 crore contract for artillery gun. And since being L1, they will be able to get 60% of this order and 40% will go to Tata Advanced System. And now this has to be approved by the cabinet committee, and the last process will be that, and then the product will go in for production and all. So this has come a good positive for Bharat Forge and should act as positive for the company. That's all from us. Now request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So in today's session, we might see some profit taking in gold and silver. Gold week below 78 350 to 450, so one should sell on rise around 78 350 to 750 450 with a stop loss of 78 700, and on downside 78,000 77,800 is the area where one should look for profit booking. And in silver, we are expecting prices to test 93,300, 93,000 on lower end. So prices are weak below 94,400. So selling on rise around 94,300 is recommended with a stop loss of 94,850. Whereas crude oil, we are expecting prices to test 6080, 6100 on upside. So buying on dips around 6,000 to 5980 is recommended with a stop loss of 5930. And in natural gas, we are recommending to buy around 230 with a stop loss of 223. On upside, 245 to 50 is the target we are eyeing for. And in base metals, copper prices are heading towards 860, 862. So buy on dips and maintain a stop loss of 852. And in zinc also, there could be some pullback till 285.50 to 86. From there, one can initiate a sell with a stop loss of 288.50. And again, on downside, 282 is the target where one should book profits. So that's it from us. Thank you very much.